Hey, what's up, everybody? All right, this is Chef again, and we're going to talk about the market and a few tickers that have my interest for some swing trades and some day trades. But first of all, let's go look back on ES, see what the market is doing. This is the weekly time frame, and what we have here is a nice little downtrend still. So nothing's really changed, right? We're still there, and if you grab these wicks here, that is the yearly downtrend. So every time we hit that trend line, we got smacked. Even here, right before December, in December and before the year was over, we got smacked down pretty aggressively. And I think at that time there was a catalyst as well. I think two catalysts here with the Feds and some numbers and like some CPI stuff. But we ran up and then we dropped back down. Same thing here, same thing here. So just lots going on. So we ended the month and the year on a red note. So basically, we ended up way down here at like 38.80 from the drop of 48.08, which is not too bad. Most people thought that we were gonna come down here, test this level, and then test this level down here. A lot of people saying that there's gaps, but if you look at this weekly time frame, there really isn't any gaps, right? Other than this big one that happened when the whole COVID thing basically hit, right? But just to keep in mind, the way you want to look at this, when you have a yearly trend, you want to ask yourself how many sellers are showing up and how many buyers are showing up when you're trying to look for a reversal. Looking for a reversal is difficult to accept because when you switch from bearish to bullish, it's questionable because a lot of times the volume dies down and the bias sticks because we're on a huge downtrend. Technically, we're not in a huge downtrend. We've been uptrending like crazy for the past years and years. So we've been in a bullish market, if you can say that, right? There are times where we pull back and we become bearish, but in general, I mean, look at this. We've been from 1475 to 48.08. That's a big accomplishment in the markets in general, right? So I've been trading for 5 years. So this is 1, 2, 3, 4, 5. This is where I learned how to basically start trading and lost tons of money. And then this year, when this happened, made tons of money those 2 years during COVID, just like everybody else out there, right? A lot of people built systems and created systems in order to become profitable. But I already had, 2 years experience here, and this was brand new to me. So a lot of things were still brand new, but yet one and the same. But I understood that we're still, uptrending, and characteristics change, patterns change. Retests are not all the same, and everything is going to be different. So it's up to us to figure out where something is going to change and what to look for exactly. My point here is to show you how many sellers and how many buyers are showing up and to point it out based on these candles. We have a strong yearly downtrend. This thing got smacked and it dropped all the way here. Okay, so from the beginning, I want to show you guys and point that out. That's how many sellers showed up. And then this happened. The same sellers who were here ended up dropping it all the way into this bottom down here. After that, more of those same sellers came in and they dropped it way down here. Okay, so this is when we hit 35 and 36. Once this happened, we came here and we fought. Okay, so these sellers who were here the past 2 times that we hit the trend line and created one actually, that many did not show up here. Number one, because we did not continue towards the end of the year, and we did not continue with a strong candle body. The wick here is a sign of rejection, yes. But comparing to like these amount of sellers that were here in the past, they're not here in the future. So this yearly rejection was not as strong. Yes, it was aggressive, okay? Not taking anything away from that. But the same amount of sellers just shows basically because of this right here, okay? This actually created a squeeze the last 2 weeks of the year. And now we're opening up nice and green in order to test that same trend line. So this week, basically what everybody is looking for now is if this is going to be a reversal. The cool thing is that we only have 4 trading days this week, and I would love to see just a nice red candle, right? Maybe like this, like that's how big I want it, right? So 39.60, or you can even say 39.50. But 39.60, 39.70, I want 50% of this specific candle, right? So if you measure just from like that 39.14 all the way to that top of like 40.20, you want to meet in, halfway, and you want to make sure that the buyers who were here, and then here, we want to make sure that these buyers are still in control and pushing it back up. Pushing it back up will give us that confirmation that the strong close at a resistance point, the sellers will not be there. So let's just say we do get a green candle like this, you're still going to need that pullback to come down here, go a little sideways, and then do this here, right? That's naturally what happens when you break up a pattern. You push up, you come down, you go sideways just for like a day or two, and then you push back up into a staircase pattern, building a new trend, right? So the trend change will happen then. That is the proper way to actually see it and experience it. So this week, I wouldn't want a huge candle to hit 41. Now, I think it would be great, but I don't think it's the proper way to actually, push this up. So I would rather see a red candle first, right? So I want to see this candle just do this, or even create just a come down here, right? The net, like, let's just say Tuesday, Wednesday, and then Thursday, Friday, we push back up. That'll signify that the buyers were still there in a control point, pushing it back up. Therefore, the next candle can do something like this. And then you'll create that staircase pattern to the upside. And then once we start breaking that and get that proper retest, that following week, which will be next week, it will create a bullish sentiment reversal in the markets. And then that's where everybody's going to get trigger happy again. And, just start buying tops and start buying bottoms and start confirming that, new investors want to come in and start, building portfolios. And then once this happens, all those who bought at the bottom and have been building in these companies that are way down at the bottoms will start to add more to their positions, because it's going to show a sign of relief and a sign of bullish sentiment. Now, this conversation can definitely change, and everything that I just said can go straight out the window if and only this rejection goes heavier and it engulfs this green candle. Once we start going below that 39, I think we'll probably just stay down here and just kind of stay sideways. But we're not here for that conversation just yet, because we're not there yet. We will get there if that were to be happening, but it's not just yet. So I'm literally looking just for this to kind of pull back just a little bit the next couple of days. Even if it goes sideways, even if we just stay here this week, it's okay. Remember, I just want that pullback 50% of this specific candle alone, and then the retracement back up. Therefore, you show like a nice wick right here, and then, a little doji candle or whatever. This doji candle is actually kind of nice. So if this market you just stay like this, it'd be perfect, right? But we still got 4 trading days, so that's not going to happen. But either way, I want you guys to see like the value of understanding what price action is. Price action is a bearish sentiment in this case, because everything that's happened in the past, right, dropped, happened in the future, dropped, and here, not that many sellers. If this would have kept continuing to the downside, then this would have collapsed even more, and we would have broke 35 without hesitation. That's not the case now. So understand that and accept that this market can potentially go bullish. Some of you guys are going to fight and say, hey, we're going into recession. Well, that doesn't mean anything. I can still day trade this, day trade this, day trade that. And if we drop and we decide to drop over here, then that's fine too, as long as we understand what's happening with the charts and the retest of that trend line, the break of the trend line, and knowing that not that many sellers showed up towards the end of the year, therefore changing the pattern and changing the sentiment to a potential price action change into a bullish sentiment. Okay, so that's the conversation that I'm giving to you guys. That is the perspective that I'm giving you guys. And whether somebody out there says recession in the next 6 months or we're going to experience the worst, honestly, in my opinion, I really think that we've already experienced the worst, and a lot of the volatility basically died down. Volatility means fear. If you can see, the VIX is below 20 now. As long as the VIX continues to stay below 20 and 25, it should be okay because there's no major fear. Okay. So this is just heading down, and I hope it just comes back down to like 10 or 15, and just, continues to lower. No reason to chart this because you can't chart fear. Remember, fear is not charted. Fear happens, randomly and in the middle of a crisis of a crazy catalyst, and it'll drive for that specific day or the next few days if it's just a major one. Otherwise, you really don't need this, right? But that's the breakdown on ES. I hope you guys get to understand that a little bit more. If not, feel free to DM me. I am at Conservative Collectors, just chilling there. So if you guys need help, just tag me. But with that said, I'm going to give you guys your first ticker. This one really has my attention because I'm already in the swing on this. Let me show you this weekly time frame. What is it, 4 hour? All right, 4 hour. Here you go. Nice falling wedge. Okay. And I actually entered, what is this, a couple of days ago? The day before, yeah, right here on this day, Thursday into Friday. Right here, it looks like we're breaking up. The cool thing about this pattern is that if we go over 100, we have potential to hit 102. So I already marked it here, 102. We have potential to hit 104, and then this high of like 107. So like 106 to 107. If it wants to go higher, let it go higher, right? We only have 4 trading days, so that's kind of cool. If this rejects tomorrow, I'm going to use this 98 as a stop loss. I don't want it to go below 98 at all because I bought in over here when this actually came down. Let me show you guys where I entered. I'm going to go on the 15. So you can see like this nice sideways movement. I entered around this area right here. Okay, so around like that 95 and 96. That's kind of like my buy area. So as long as it continues to break this, and it looks like it can potentially break on the 4 hour time frame, remember that it's a falling wedge, and usually falling wedges tend to do something like this right here, just like this. So I'm looking for a nice movement to the upside, and it can later potentially hit this like 168. So just so you guys know what that's like. But that's the first one. You can use it as day trade or a swing trade, however you want, right? The next one is going to be Snow. All right, so this one, again, nice downtrend, just like everything else, a lot of downtrends. But right now, like I said, what I'm looking for is reversals and potential reversal in the market in general. Not everything necessarily has to create a reversal, but definitely some great risk to reward to the upside than there is for the downside right now, okay? Some of you may disagree just because you're still biased on inflation and recession and, things are going to go bad. But remember that you can make money to the upside and downside. And if you see more value to the downside, by all means. But if you look at some of these tickers, they have tons of room to the upside and go retest a lot of those levels. But Snow is a very easy one. It's literally a legit trade for tomorrow. All right, 142 right here, as long as it goes above this piece here, or you could just use whatever the pre-market is. Once whatever pre-market high or low is, then that's probably the direction that we're going to head in. It's either we're going to get a nice drop or a nice pop in, and this will act as a magnet, okay? So it'll attract it, and it'll probably hit about 148, okay? So that's Snow. The next one is going to be CVX. Oil's kind of sitting at a good spot. Let me just show you real quick where it's at. Here's the weekly. The weekly, we're still on a nice downtrend, but it looks like we didn't make any lower lows. And we have a nice green candle to start off. Last week, a nice green one and a red one. So we're kind of just flat, which is really good. Accumulation is the one thing you want to look for before the next run up or run down, okay? Again, whichever way it decides to go, but I see a lot of slowdown, which is a good thing. So it's just kind of creating some structure, creating some value, creating stability. Because a lot of the hype already basically is gone, right? So now it's just going to find its own accumulation phase and then figure out where it's going to go and head into, right? So while that's doing that, you still got to be able to look at other tickers that follow this specific sector. So based on the 4 hour time frame, look how tight this is getting here, right? All you got to do is draw a trend line from that 189.68 and come down here and touch these tops here on the 4 hour time frame and do the same thing on the bottom. So I am looking for a break of like 178 and probably 180. So as long as it can continue and oil is doing good, oil decides to kind of just accumulate the next few days, CVX has potential to either pop or respect that trend line and just drop into that bottom. So whichever way it decides to go, that's the way that we can set alerts on. But as you can see, I'm only on the bullish side, just because in my preference, I rather trade some calls to the upside because like I said earlier, the risk to reward to upside is a lot better in this market right now than the downside, okay? Now this one is kind of very high up here, so doesn't have a lot of upside reward, but definitely still because it's a pattern and it's a break of, then I would look for a nice bullish move to the upside. This next one is going to be a fairly easy one. It's Costco. If you guys don't know me, the type of trader I am a rally-based rally trader or a drop-based drop trader. Basically, what that means is the pop sideways accumulation and then the pop up or the drop down, whichever one comes first. So this is called a rally base. We created a base right here. So over that, what is this? 480, just say 487, and then the bottom of 478. Set your alerts there. Once we break above, it's gonna have a pretty decent move. 487, 478, 477. About a $10 move, so it can potentially move $10, all right? But that's it. That's it for Costco. If you trade this, be careful because the spreads are high. I mean wide, and it's a very high risk ticker, right? Usually this doesn't move with the market nor against the market, but sometimes it does. And when it does go against the market, it usually has a pretty big move. If it moves with the market, again, usually does have a pretty big move as well. So just keep tabs on this one as well. The next one is going to be Tesla. Now, I think a lot of people have so many opinions about Tesla, and really the opinions doesn't really matter. Okay, at the end of the day, if the chart is breaking up, then let's go up. If the chart is breaking down, then let's go down. Right? You're an option trader. You are somebody who makes money to the upside and downside. Just choose your preference, choose what works for you, and follow that direction. If it doesn't go, then don't go with it or don't go against it. Okay. Be prepared for anything. This one has been getting a lot of volume lately. So since the beginning of the year, well, sorry, since 12/16, it's caught a lot of attention here because it broke some levels and basically collapsed to the floor. It could definitely drop lower, but again, I am not looking for downside movement anymore. This still has a nice trend line here, and it can act as a magnet into earnings, or it can just stay here in between. If it does break though, okay, if it breaks this like 124, 125, then for sure look for 130, 35, 40, 45, 50. The only thing about this is that if you go to the trade tab, you open up the IV, it's already at like 89, 97, 85. This is probably going to hit 120, just because we do have earnings, and there's going to be a lot of people who are going to play puts just because it's already down. I don't think it's wise playing puts at this at these levels, because honestly, like, you really want Tesla to go to 80 or 90? That's kind of ridiculous, right? Can it happen? Yes, of course it can. This thing can go to zero if it wanted to. This thing can get delisted if it wanted to. Stocks do whatever they want, guys, but just be cautious. You're already at the bottom. Don't try to short it, okay? Be wise. Look for upside potential versus downside potential. Like, it's all about risk to reward, guys, right? Now, if you definitely don't like this company, then by all means, feel free to short it, right? I think Tesla's at a great area, great buy area for investors in general, because Tesla as a company as a whole does show growth potential in the future, and does show some good numbers, good revenue, and they just do a lot of stuff. So that's just my basic opinion. I can't get too much into it because then somebody will argue. But be careful. It does have earnings coming up soon. Lots of volume came down here, as you can see, since we've been kind of here. You guys see the blue things in the back. That's the volume bars. So there's been tons of crazy volume down here. But yeah, just treat it that way. And then this bottom down here, treat it as a demand, that 105 to that 110. And then again, like the 120 to about 125 is some supply. So if it does break, it'll have a nice run up into earnings, which will be kind of nice. But yeah, enjoy that one, okay? All right, so the last one, I'm going to give you guys TTD. This one, I had to show you guys a Google chart as well. What I like about this one is that it did slow down as well. It slowed down in the area as in the past. Okay. So all this area right here is the area of accumulation. We're kind of in the same boat again, except this one's a little bit smaller and softer, based on the buying volume and pressure because of the market. But even after that huge downtrend, we came back down here. So imagine looking at something that's in the past that it can be in the future as well. This can be considered a great risk to reward with a nice bullish market. Why? Because look at the way that it reacted once we started breaking above that 50 level. Above that 50, we hit 76, which was kind of nice because of earnings. The difference now is that we're kind of moving sideways and it's a lot smaller. And we could definitely move up in a healthier way versus in this way here that just shot straight back up, right? This one actually broke lower and it hit like this 39, and then we haven't broken any lower besides that. So on a smaller scale, I'm just looking for this to continue into the next 4 days, again with the bullish markets. Otherwise, below that 46, we're going to come back to 43. Okay, but again, I'm looking and pointing out tickers that have great risk to reward right now that can potentially lead to some really good swings, and be alert because the upside potential is huge, right? So just keep that in mind. The other ones, the last two guys, is Amazon. Amazon has a lot of movement as well. We're below 100. I honestly, like, again, just like Tesla, in my opinion, anything on Amazon below 100 is like gold. I remember when this thing used to be like, 3K, 4K, 5K, and people would make comments like, if this thing ever went down to 1K, I would buy loads of shares. What happened? Nobody bought any, right? That conversation went out the window. And that conversation now is saying, oh, it's going to go to 80. Oh, it's going to go to 70. Oh, it's going to go to 60. I'll buy then. But like in general, if you're going to invest in something that makes sense. And if you believe in that company and that they can grow, then at below 100, it's a steal, right? Same for Google. Same thing. This thing was in the highs, 2K, 3K, 4K, 5K, whatever it was. And the same conversation when this went up here, people were like, oh, if this ever goes below, 1K, I'm going to buy it. Well, conversation now is the same. We're below $100 a share and nobody's buying it. Okay. That's the type of perspective that I look at, because it makes perfect sense for an investor to come in and say, shoot, that's below $100. And I believe in the company, and that the value that it has for future potential growth is huge. But again, it is just something that I have an opinion of. Doesn't necessarily mean you have to have it, but pointing out the facts. So here, just like TTD, like I showed you guys, it had a nice base, a break above, a retest, and a continuation. I am actually in 92 calls for Google, so I'm going to be holding these for a couple weeks. I like the pattern here. So if we can continue over 92, we should head into like that 94, 96 level, just kind of test this level as well. Just look for a pattern continuation on the breakup. So probably buy the dip down here at like 91, just so it can keep on continuing to break up, only with a bullish market, guys. Okay. All these levels, these charts that I'm showing you guys could still short it if the market goes red. So don't be afraid to use the same levels as rejection and stop losses. Okay. But other than that, guys, this market's fine. Whatever you guys are trading, whether it's upside or downside, just manage your risk is all I can really tell you. Manage your risk, be wise, and don't go heavy on anything until you're 100% comfortable knowing that you've built a system, you follow your system, you respect your system. Okay. Stay consistent. In this fresh new year, take it day by day. Okay. Don't expect that we're going to head into the recession in like 10 months and you're still playing puts while this thing goes green. All right. Vice versa. If you're bullish, but this thing keeps dropping, stop playing so many bullish plays and leaps and all this stuff. I personally started grabbing leaps, which is cool. But I like, as a day trader, I sell them because I see them in the green, and I'm very cautious knowing that we're not in the reversal just yet. So I have to be a lot more cautious to the upside, and be aware, like knowing what kind of trend I'm in right now. All right. So it's kind of cool. But either way, hopefully you guys got a good watch list for the week. I know some of you guys are gonna play earnings, so good luck with that. If you guys are gambling, don't start bad habits, guys. If you guys haven't, okay, stay away. Build some good habits, some good consistency, and know that FOMO is part of trading. And if you're going through some FOMO, please just walk away. All right, but that's it for me, guys. You guys have a green week. It's a short week, and a lot of tickers and names out there to trade. I just can't break them all down, right? But anyways, you guys have a good one. Have a great week, and let me know if you need anything. We're at Conservative Collectors, and yeah, I'll see you guys on the next one.